Season. So let's quickly get to a management conversation as well. KEC International is the company on the radar right now. The company reported a pretty good performance for the fourth quarter. It was a better end to what was otherwise, let's say, a muted year. Perhaps one can call it that. The company, of course, is talking about its order book growing forward, going ahead. Let's discuss this. We have Mr. Vimal Kejriwal, MD and CEO at KEC International, joining in. Great to have you back on the show, sir. Good to be talking again. So Q4 ends on a high. Like I said, the year otherwise, the market is obviously saying that you've not been able to meet your lower guidance, whether it's on, the margin. I think you'd guided for margins 7 to 7.5%. You're at the lower end as the year ends, about 7. And top line growth 12 to 14%, but you did about 10 odd %. So now, sir, let's talk about this, because the commentary, what we've got from the press release, etc., is looking very strong. You're talking about the T&D segment doing better, money being released by state governments, so maybe the water business starts doing better, rail, etc. So let's talk about the top line growth and the order book growth that you see ahead this year.
Morning, Surabhi. Thanks for having me. I think I'll just take a minute on your earlier comment. Basically, after the Q3, we had down our margins to 7%. And growth, yes, I think the basic issue which we have faced in Q4 has been the shortfall in the payments and water. We were expecting that the water business would, the payments would be released by the governments and we would be able to, sort of execute those orders. We have now started receiving monies and we have started executing the projects. So that has led to a slightly lower growth. Instead of 12, we have ended up at 11%, and for the year 10%, etc. And similar margins also at the end of Q3, we had switched over to 7 because of this only. Water is a more profitable business. So I think that's where the margins are and the top line is slightly lower, although to me they are a record high for the company as a whole.
But FY26 now, sir, that's fair. But like I said, it's ended on a very optimistic note the previous year. FY26, now let's talk about the order book. There's a large L1 pipeline. How much do you see coming to you? And of course, revenue.
Just one thing, Mr. Kejriwal, sorry, just to finish that point on margins. So where do you see margins at FY26?
So Q4, we ended up at 7.8. And for next year, we have been now talking about 8 to 8.5%.
Which is 8 to 8.5% this year, FY26, the financial year we're in.
FY26, yes.
Okay. Glad to clarify that. Go on, sir, to the point of orders, L1, etc., what Surabhi was asking.
Yeah, sure. So I think this year we had an order intake of slightly lesser than 25,000 crores, of which almost more than 70% was in T&D. Almost 18,000 crores came in from T&D, rest coming from civil and railways and cables, etc. We have an order book plus L1 right now of around 40,000 crores. This year already we have declared orders of more than 2,000. So with that, I don't think we are looking at a growth which would be less than 15% for the year. Margins I have already talked about.
15% revenue growth for this year. Got that, sir. We've noted that. Also, this improvement in the margin profile from 7.8% in fourth quarter, you're talking about almost 100 basis points improvement by the time the full year ends, this current year. What will drive it? Will the mix change? Give us a little more color on both the revenue growth and the margin growth. What will drive it?
So clearly the mix will change slightly with the railways coming down. Last year also railways came down from 3,000 crores to 2,000 crores and we expect it to continue at 2,000 crores, whereas our overall top line will grow by 15%. Transmission, as I said, was 70% of our order intake, and I think it's around 60% of our order book. So we expect that within the businesses, the revenue share of transmission will grow up, and I think it's more profitable than all other businesses. So that's one basic reason. Second is we expect that the civil margins also will start, inching towards 8% or something. So both these factors would help us in improving the margins. I think the other thing which we need to keep in mind is that our interest costs have been coming down. For the quarter, we were at 2.5% of the revenue. So when you look at the PBT and PAT, our PBT and PAT have grown by more than 60%. So I think more than EBITDA, we start looking at that. There we expect a much higher growth.
Okay, all right. Mr. Kejriwal, I take that point on board. In fact, your net working capital days as well has come down by around 12 days. Will it hover around this vicinity of around 120 days or do you want to guide for a higher number? If you could give us some clarity on that front. Yes. And as you said, your net debt as well, I'm looking at it, including acceptances, that's come down, I think, from around 5,000 crores, it's come down to around 4,500 crores. Does it stabilize at these numbers? Working capital and net debt. Please go ahead.
So Nigel, on the working capital, from December, we're down by 1,000 crores. From last March, we're down by 500 crores, and we expect it to go down further by another 500 crores this year, despite the 15% growth in the top line, which we are talking about. So I think we are very comfortable with what's happening on the net debt side and on the interest side. In fact, our interest for the year is at 3% of revenue, 2.5 for the quarter, and we are hoping that we'll be able to maintain 2.5 for the whole year.
Okay, all right. 2.5% interest cost as a percentage of sales. And the working capital days, around 120 days?
No, it will come down by at least 10 days.
Another 10 days, so around 110 days, 112 days is what we could work with. Got that, Mr. Kejriwal. Just a quick question. There is these legacy issues on a couple of aspects. If I look at water, if I look at railways as well, do you think bulk of it now is behind us and things will only get better from here on?
So water is not a legacy issue. There were new orders which we got 2 years back. We still have an order book of almost 2,000 crores, profitable orders. I think it's just waiting for funding from the government. We have orders in 2 states, MP and Orissa. Funding has started flowing in. So I think hopefully this year we are targeting almost, I'll say, 12 to 1,500 crores of revenue from water. So water is not a worry in the sense of profitability. It's been a worry in terms of revenue, etc. Railways has been a problem, I think, but we are now almost at the end of the tunnel. We have closed most of the orders, and hopefully we should be able to get out of all those issues by this year end.
Okay, and T&D side, it seems you all have got quite a lot of strength. According to your analysis, in India at least, the business has looked up. That is one part of the business has looked up. Have you gained market share?
I don't think I'll say we have gained market share, but what is happening is that the quality of the order intake and the margins are going up because the order sizes are going up. And they are becoming much more complex. So I'll not say market share, but I think overall the top line and the margins have grown.
Mr. Kejriwal, nice touch there on railways end of the tunnel or light at the end of the tunnel. Just a quick point in terms of water. Will you, like railways, will you go slow now on railways? You've gone slow. You told us that over the last many quarters we've spoken. Will you do the same with water if new orders come? Because this is all B2G, right? So the government has to release payment, and that can go sometimes. It can be out of whack.
So Prashant, water was never a problem. I'll tell you honestly, till the last year, till before the elections, parliamentary elections, we were getting water. I think water payment was one of the best we had from government. You raise a bill on 27th and 31st, you used to get the payment. I think somewhere something happened and the allocation to water went down. So what we are looking at is a state by state. Like today, MP is paying reasonably well. So it will depend upon which state and what the payment track record is, and then we will decide. We are not aggressive on it. Let me put it this way. But we are looking at, with the experience we have gained, we are looking at taking up some projects on the international side.
I'm glad you mentioned that, sir. I was just coming to the international.
One thing.
Okay.
What exactly do you do, Mr. Kejriwal, with in terms of the segment, water?
So basically, we are in what they call Jal Se Nal Tak. So it's basically putting up intake wells, filtering the water, and taking them to the end user.
This must be a pretty. It's obviously very large allocations in the budget, flagship program, etc. Could you give us a sense of how? I mean, every year, what is the amount spent really?
I think the last budget allocation was around 65 or 70,000 crores. I think the problem, Prashant, what is happening is typically 50% comes from the state, 50% comes from the center. I think that's where the mismatch happens. Sort of who will fund the money first? That's where I think the problem is happening. It's getting sorted out. It was sorted out earlier. Somewhere last year it got into trouble. Hopefully it should get resolved.
Got that. You also mentioned that you will be looking at water projects in the international markets. And that was my question. Overall, sir, finally give us a color on the mix between, the share of India revenue, overseas revenue, across businesses. I mean, T&D, you've been always very big and bullish on the Middle East markets. What's happening there? This year, how are you expecting the international business to perform? And of course, water, like you just mentioned.
So T&D typically is around 70% of our T&D business is from international and 30% is from India. But overall, if you look at the overall ratio, it's the other way around because we still don't do railways and civil and all others outside. So if you look at the overall level, it would be 70 India, 30 international. But T&D is the other way around. That's the way the ratios are. And I think what is happening on the T&D side, our major areas continue to be Middle East, whether it is UAE, whether it's Saudi, Oman, Kuwait. I think we are doing very well. We have a large order book in those areas.
All right, Mr. Kejriwal, we'll leave it there, sir. Thank you very much for coming on first here on CNBC TV18 and speaking to us about FY26 across business segments. Good luck, sir.